My guest today, Peter Schiff, believes that both gold and silver are headed much higher ahead in the face of rampant central bank money printing that threatens to accelerate to address massive government debt and deficits in an era of rising inflation that Peter believes could completely wipe out the middle class. In this scenario, he sees not only the metals, but the gold and silver miners outperforming ahead. And he breaks down which areas of that sector he's seeing the most value in today. All of this and so much more ahead. And guys, the first Commodity Culture Boot Camp is coming up this Saturday, June 27th at 1 p.m. Eastern Time. Find out how, using a portfolio constructed of almost entirely commodities, I've handily outperformed the S&P 500 over a 5-year time frame. Use the link in the description below, join.jesseday.ca. And now, here's Peter Schiff. Peter Schiff, great to have you back on Commodity Culture. I want to kick the conversation off today with silver, now below $70. We're at around $65 as of the last time I checked. Is this a buying opportunity, or do you think some caution is warranted here? And in the long term, what do you see the trajectory of the silver market being?
Well, I mean, I think it's going much higher. I think we had a significant breakout at the end of last year, early this year, where silver ramped from like $30 an ounce up to over 120. And then it had a big pullback that kind of coincided with the beginning of the Iran war, and silver pulled back, back below 70, which is where it's trading now. As you said, it's closer to 65. But ever since it blew through 50, it hasn't even come close to that level. So I think that silver, had a major breakout. Clearly, breaking through 50 years of resistance resulted in an overshoot. And now we've back and filled a lot of that overshoot. But I think it is a real breakout. That's why we haven't seen it even pull back anywhere near 50. So I think anything between 60 and 65, or probably anything under 70, long-term probably represents as good a buy on silver as you're going to get. And I think ultimately we're headed a lot higher than that prior peak. It's just, going to take a little time to get back up there. But I think once we get through it, silver's headed, $200 an ounce and higher than that.
And you mentioned the Iran war. I'd love to pick your brain on why both gold and silver fell in the aftermath of that event starting and have largely trended sideways since then. We've seen an interesting pattern where whenever peace is proposed or apparently on the table, it seems like the metals rise, and when it looks like the war is back on, they fall again. This runs contrary to some people's thinking, where they think precious metals are a safe haven asset. Shouldn't they be skyrocketing while a conflict is going on? Why do you think the price action has played out that way?
Well, first of all, you have to put everything in perspective, because gold and silver rallied so substantially leading up to the war that they were due for a pullback, and the war provided that catalyst. In fact, one of the reasons for the strength was that it was pretty apparent that there was going to be some kind of war, and the market started anticipating that and pricing it in. So by the time the war actually started, it was more of a buy the rumor and then sell the fact. But the thinking that was dominating the markets was that anything that perpetuated the war kept the Fed on hold, kept oil prices high, meant the Fed wouldn't cut rates, meant they might hike rates. And that had the metals on the defensive, because everything is trading off of what they expect the Fed to do with rates. But I think that misses the bigger picture, in that even if the Fed hikes rates, it's not necessarily bearish for gold if inflation is rising more than the hikes, because real rates are what drive gold and silver, not nominal rates. I mean, even if the Fed pushed rates up to 10%, but inflation was 20%, that's a negative 10% yield. That's not an incentive to hold dollars and lose 10% of your purchasing power every year. That's an incentive to hold gold and silver instead and retain your purchasing power. So I think once we kind of work off the excess overbought condition we had, we're going higher. And I think eventually we will see a recoupling where investors recognize that war is good for gold and silver, not bad, because war ultimately is inflationary, not the war itself, but the way governments pay for the war, by printing money, by running bigger deficits. And wars also disrupt resources that might otherwise go into the production of consumer goods, and instead they're used for military hardware and things like that. And so during wartime, you have less stuff produced that consumers can buy, and you have more money printed to pay for it. So it's a recipe for inflation, and that's good for gold and silver. It's not bad.
Now, gold surpassed U.S. Treasuries as a reserve asset near the end of last year. A report recently released by the ECB puts this statistic back in the spotlight. How significant is this development in your view? And is this a sign that this gold bull market is still in the early stages?
Yeah, I think it's very significant. And I think the trend is going to continue and is going to be very problematic for the United States, because to the extent that central banks prefer gold to dollars, they're not buying treasuries. And if they're not buying treasuries, who's going to buy them? The government has to sell them. And if foreign central banks don't want them, then somebody's going to have to take their place. And in order to get those new buyers, the government may have to offer much higher yields. The problem is we can't afford to pay the higher yields. So in the alternative, it may be the U.S. central bank that buys the treasuries that foreign central banks are no longer buying. But that is highly inflationary, because when, let's say, a Polish central bank buys treasuries, it has to use dollars from its reserves. But when the Fed buys treasuries, it creates more dollars out of thin air. So when the Central Bank of Poland buys treasuries, that's not inflationary. But when the Federal Reserve does, it is. And so if the Federal Reserve starts printing all this money to buy the treasuries that other central banks no longer want to buy, the dollar gets killed, prices go through the roof.
The ongoing saga of gold and silver miners barely outperforming the metals continues, with many of them reporting record earnings. Their stocks actually fell as a result. Why do you think this disconnect exists, and what will it take for this trend to reverse in your view?
Investors still don't believe the price of gold. They still expect the price to fall. They think maybe gold is in a bubble, silver's in a bubble. And so they're not willing to price in these higher prices in the long run, which is what drives their valuation of mining stocks. But obviously, at some point, that perception is going to change. I think reality is going to set in, and analysts are going to accept the fact that not only are gold and silver prices not going to come way down, but they're going to keep rising. And then they're going to have to totally redo their earnings forecasts and their valuations of these stocks. But the whole market is kind of screwed up. I mean, it's all based on perception. Look at the values that investors are ascribing to AI companies. Look at the valuation just placed on SpaceX. SpaceX doesn't even earn any money. SpaceX is still losing money. But investors don't care about that. They're so optimistic on the future that they're willing to pay 100 times revenues just to own a chance that it happens. So they don't want to gamble on gold stocks, even though they're already earning a lot of money. They'd rather gamble on SpaceX that's earning no money. So it's just a perception. But at some point, investors are going to look towards the certainty of precious metals miners as being more valuable than just rolling the dice on a company like SpaceX.
Yeah, I want to get into the SpaceX IPO in just a moment, but first I'd like to ask, where would you be positioned in the gold and silver miners here? Is this a time when you want to own the biggest and the best producers, maybe the ETFs, obviously exposure to physical gold as well, or would you be going further out on the risk spectrum into the developers and the explorers?
Well, I like to buy individual names, and I like to do research, and I think there's a lot of inefficiencies in the space. The best and brightest analysts are not necessarily assigned to metals and mining. So if you've got a good portfolio manager, if you got a good guy, he generally has a leg up. So rather than just buying everything, I'd rather be selective, buy what looks cheap and promising, and avoid what looks expensive and just too big of a crapshoot. But there's a lot of opportunities, obviously, not only in the big companies and the mid tiers, but a lot of these junior companies. I think, at some point they're going to be worth a lot more, even if they don't develop to the extent that we hope that they will, because at some point investors will be more willing to speculate in this sector. And when the hot money comes in, prices are going way up. So, it's a great opportunity to be invested now.
Commodity Culture is hosting our first live boot camp Saturday, June 27th at 1 p.m. Eastern Time. We're going to take an in-depth look inside my portfolio, A to Z, what I own, why I own it, what I'm buying, what I'm selling, and the framework through which I'm viewing the commodities sector right now as geopolitical instability, global conflict, rampant inflation, and central bank money printing continues to ramp up. Natural resources will be the winner in the years ahead. I'm going to explain why, share the greatest insights I've absorbed from all the guests on this program, and so much more. So join me for the Commodity Crisis Playbook Bootcamp, Saturday, June 27th at 1 p.m. Eastern Time. Sign up using the link in the description below. Both institutions and retail investors seem to pile into the SpaceX IPO. This is a company reporting massive net losses, more than 4 billion in the first quarter of this year. Now, it should be noted that SpaceX is down 10% today, the last time I checked my screen. So it looks like perhaps reality is rearing its ugly head at this point. Is this IPO peak bubble territory in your view, or just a sign of the times where intrinsic value doesn't matter anymore?
Yeah, I mean, look, it's down 10.5% today. I'm looking at it 165. The IPO price was 135. And it opened that day at 150. So it's still above its opening trade. But yeah, it did run above 200, 210 or something. I think a couple of days, maybe the Monday after the IPO or Tuesday. But the thing that's really driving SpaceX is the ridiculously small float. Only 4% approximately of the company was sold. So 96% of the shares are not available to be bought, or and are not being sold. And you have all these institutions and all these retail investors, even though the total value of the available stock is or was at the IPO price $75 billion. That's still not a lot when you have everybody in the world wanting to buy some. And so people were in a bidding frenzy to get a piece of this thing, regardless of what a piece is actually worth. But over time, a lot of the stock that's held by the early investors, by employees, it's going to come on the market. And the supply of stock is going to increase, I think, faster than the demand. And so the price is going to go down. And so my advice to people who want SpaceX is to wait, because I think the opportunity to buy will be a lot better in the future than it is now, because you're paying for too much upside that hasn't happened yet. It's priced for perfection. Right now, the main business that they have that's viable really is Starlink. And it's hard to know what Starlink is actually worth, or how much competition it's going to face in the future. They're making good money now leasing their excess compute to like Anthropic, and I think they announced another deal today. But this is all temporary stuff. This is not, they're not going to have this revenue in 5 or 10 years. This is just kind of like a stopgap thing during this hyperscaler AI race. So they're able to leverage that. But how much is their space business actually worth? I have no idea. The space and SpaceX, I don't know how commercially viable space is going to be, and nobody does. I don't see a lot of demand, to build like on the moon and to build shit on Mars. I don't think anybody's going to really want to live there. I don't think anybody's really going to want to vacation there. I mean, you're going to have you know, some guys, like the ones that wanted to go down to see the Titanic. But, for my money, if, most people, if they have a week or two off, they'd rather go to Tahiti. They don't want to get crammed up in a little capsule and shot into orbit and hope that they survive and pay like, I mean, I don't know how much those things would cost, but I'd rather be on Earth. I mean, there's nothing like Earth. Earth is by far the best place for humans to be is on Earth. So
Well, I want to turn to the economy and read one of your recent tweets. You wrote, in May, the U.S. government spent $628 billion, yet collected just $335 billion in taxes. That means that balancing the budget would require taxes to almost double. Since that won't happen, massive money printing will cover the shortfall, sending consumer prices doubling instead. Now, if you expect this level of inflation up ahead, what could that do to the middle class in America? And is one of the remedies here physical gold and silver to protect purchasing power?
look, the middle class is getting wiped out. I mean, that's what's happening. That's why the consumer confidence numbers are at record lows. That's why Trump's popularity is at a record low. That's where the affordability crisis is coming from. People can't afford things. It's not because the things are more expensive. It's because the people are poor. And the reason they're poor is because the government took their purchasing power. It robbed them through inflation to cover all this spending. We have at least 50% more government now than we had before COVID, but taxes have been cut. So how are we getting all this government? I mean, it's not free. And so every time you go to the store to buy something, those higher prices are how you're paying for government. Now, there are some people, that benefit from inflation because they own a lot of assets that are also being inflated. And it doesn't matter to them that their food is more expensive, that their, gas is more expensive, because those are small expenditures in the scheme of things. But when you're living paycheck to paycheck and you're spending a good chunk of your money on the necessities of life, when those necessities go way up in price, it is a big deal for you. And that's what's happening. The middle class is basically disappearing, or what's left of it, because we've been, basically eviscerating the middle class for decades now.
You mentioned the Fed earlier in our conversation. What do you think about new Fed Chair Kevin Warsh? At the last FOMC meeting, rates were left unchanged. Warsh gave a little speech. Is this just a case of meet the new boss, same as the old, or is this guy really going to shake things up and do anything good in your view?
I don't think he's going to shake anything up. I don't think he's going to do anything. I just think he's talking now to try to come in with some credibility. Hey, new sheriff in town. I'm going to clean up the streets, right? I mean, you guys better watch it. I'm serious now about inflation and price stability. But at the end of the day, he's not going to do anything, because if he really decides to get inflation down to 2%, that means he's going to create a massive recession. He's going to cause stocks and real estate and bond prices to crash. He's going to force the U.S. government into major spending cuts or tax hikes. He could easily precipitate another financial crisis. A lot of bad things are going to happen in order to achieve that objective. And at the end of the day, I don't think he's going to do it. I don't think he has the guts to do it. He's going to do what Powell did. He's going to do what Yellen did, what Bernanke did, what Greenspan did. He's going to print money. He's going to create inflation. He said inflation is a choice, and he's right. His predecessors chose inflation, and he's going to make the same choice, because making the opposite choice is politically a non-starter. And can you imagine? I mean, Trump just laid into Powell for what he did. Imagine what he would have to say if Warsh just started hiking rates like aggressively and started shrinking the balance sheet, and mortgage rates were going up, and housing prices were falling, and we were in a recession, and he kept tightening. I mean, what the hell would Trump be doing in those circumstances?
We talked about SpaceX. I'd love to get your views more broadly on the big three indices and the level of overvaluation that we're seeing there by any number of metrics. I mean, pick whatever you want: Schiller PE ratio, Buffett indicator, price to sales, price to book, etc. We're at historically stretched valuations, and yet the market seems to keep grinding higher. Do you think we are due for a large correction and perhaps longer sustained bear market in the big tech stocks up ahead? And what are your overall thoughts on the broad market right now?
Well, look, the market is as overvalued as it's ever been. So unless you're in the this time it really is different camp, which is always a very dangerous camp to be in, and you end up losing a lot of money if you're in that camp. I'm not. I think that a bubble is a bubble. And if it walks like a bubble and quacks like a bubble, right? And so we got a bubble in AI, no question about it. We got a bubble in tech. But, we really have a bubble in everything. Everything that's affected by interest rates and cheap money seems to be overpriced, except for the mining stocks and precious metals. The only thing that seems not to be in a bubble is the stuff that I own. And I think the bursting of the crypto bubble, because that bubble has for sure burst. All the air hasn't come out yet because a lot of people don't recognize the fact that A, it was a bubble, and B, that it burst. But if you look at MicroStrategy, which is just getting killed, trading at like a 20 or 25% discount to its Bitcoin. If you look at his preferred stretch, trading for more than 10% below par. Strategy now for 3 weeks in a row has deliberately destroyed shareholder value by selling its stock despite the discount and then buying more Bitcoin, which is an asinine thing to do because you're actually reducing the Bitcoin per share. So MicroStrategy shareholders are worse off because they bought the Bitcoin, because they actually own less Bitcoin after the buy than they owned before it. So why would he do something like that? It's a desperate move to try to prop up the price of Bitcoin because he's the buyer and he's willing to buy Bitcoin even if he has to destroy the value for his own shareholders in the process. So this is done, right? Put a fork in it. It is done. But to me, the fact that the most crazy bubble of all bubbles, crypto bubble isn't necessarily the biggest bubble, but it is the most insane and the most irrational because most bubbles start with something and then it just becomes excessive. Bitcoin and crypto start with nothing. It's all sizzle. There's no stake. At least SpaceX has a stake there somewhere. That's not so. And a lot of these AI companies. So the fact that the Bitcoin and crypto bubble has popped could be an indication that bubbles are popping. And it's just a matter of time before more bubbles pop. But the air is coming out of the speculative mania. It's just showing up first in the most speculative part of that mania. Just like with the mortgage bubble, it was subprime that cracked first, but then the whole mortgage market eventually, had a problem. But the problems showed up in subprime. Well, crypto was like the subprime of the tech stuff, and so its bubble burst first. But that doesn't mean the other bubbles are going to be immune.
Yeah, speaking of signs of a top stretch, this seems like a Ponzi scheme. I'm trying to wrap my head around it. There's these really cringe AI ads that they've been releasing showing somebody retiring. Oh, I built up my career and now I'm relaxing by the beach because I bought Stretch and it yields 11% with no clear explanation. How are you getting this 11, 12% yield on this product? Is this just a new version of a Ponzi scheme?
Yeah. As far as I'm concerned, it's a classic Ponzi. Unlike Bitcoin, which is kind of like a new variant. It's kind of a hybrid Ponzi, chain letter, pyramid. But Stretch is really like a pure Ponzi. The only difference is they don't hide the fact that it's a Ponzi. They put it in the small print of their disclosures. But the problem with Strategy's advertising and why I've accused him of fraud, I believe he's violating SEC rules, marketing and advertising rules, because, I have to abide by those rules myself. I'm registered. I have a company that's registered with the SEC, so I'm familiar with these laws. And I know that Saylor is breaking them because the ads that you're referring to, and these are ads that they create or that they help disseminate. Saylor goes on X and he reposts these ads that other people create, or he creates his own. But the impression that they are deliberately creating conflicts with their risk disclosures if you actually go to the prospectus. The prospectus says it's very risky. You can lose everything. Nothing is guaranteed. Right? This is risky stuff, which is true because it's a Ponzi, because he's borrowing money, paying 11%, but he has no income to pay the money. The only way he can get the money is to go out and sell more. And so he has to keep selling stock to new investors to pay off the old investors. Well, that's exactly what a Ponzi is, except normally you don't tell people it's a Ponzi because otherwise they wouldn't participate. This is the only Ponzi where people are willing to participate in it despite knowing it's a Ponzi. But the problem is a lot of unsophisticated people who don't understand what a Ponzi is, and they just see these ads. And what the ads focus on is the yield, and they downplay the risk. They say it's like a money market fund, it's like a bank account, only better because it pays 11% instead of next to nothing. And when they talk about retirees, they say, hey, you can put your retirement money, all of your retirement money, just put it in here, and now you can get this huge yield. Well, the problem is the yield's not guaranteed. They can cancel it at any minute, and you could be left holding the bag. And right now, Stretch is trading at $90. So if you bought it last month at $100 to get that 11% yield, you're already down 10%. That's almost an entire year of dividends. So you have to hold it for a year just to break even, right? If the price stays at 90. But what if it goes to 80? Well, now you need 20% to break even, right? Your principal is not guaranteed. And he kept telling everybody, we stripped all the volatility out. There's no volatility anymore, right? It's like, this is a safe security with no volatility. Well, it is volatile. That was a lie. So, I mean, the SEC should be all over him. I think the reason that the SEC has not done anything is because, Trump probably said, lay off a Saylor, because, he gave me a lot of money in my campaign, and his whole family is invested in crypto and Bitcoin, and they need him buying Bitcoin to prop up price. Well, the only way he can buy Bitcoin is to get idiots to buy Stretch. And so he has to lie to them about how safe it is. And the SEC has to look the other way and allow it to happen.
I mean, this is all part and parcel with the level of brazen corruption and the complete lack of accountability we're seeing. I want to focus on America here. It's happening in many, many parts of the world, my home country of Canada as well. But it looks like there was major insider trading before several of Trump's announcements around energy markets during the war. And one only has to look at the net worth of the political class on both sides of the aisle to see that they did not get their wealth legitimately. How did we get here? And more importantly, is there any way out of this mess aside from a revolution?
Yeah, look, I think it's a free-for-all of corruption going on right now, especially in the crypto markets and the prediction markets, which aren't even covered really by the security laws. I mean, all these guys have advanced information. Sometimes it seems that Trump is posting on Truth Social with a specific intent of manipulating a market because his friends have already placed their bets and they're waiting on his posts to cash in. I think, the irony of it is there was corruption in the Bidens, and the Republicans were correct to point it out, and the Democrats tried to downplay it. But what Biden did was nothing compared to what the Trumps are doing. Yet the Republicans are fine with it. So they're complete hypocrites. And the same thing with this war. When the war started, the Iran war started, the very first podcast I did after the war started I predicted exactly how it was going to end. I said, look, this was a mistake. Not only was it unconstitutional because Congress didn't declare it, not only did Trump basically promise he wouldn't do this and he just broke his promise, but I said that this was a mistake. We can't win this war. All we can do is surrender and pretend that we won. And that's exactly what we've done. We basically surrendered, and we're pretending it's the greatest victory in the history of warfare when we actually emerge from the war in a weaker position than when we went in. We've achieved nothing. Iran, yes, Iran has a smaller air force and a smaller navy, and there are new leaders. Instead of, the father, we got the son, right? Probably more radical than his old man was. But the regime is in power, and they're going to have a lot more influence and clout now than they did before the war. And yes, they don't have as big a conventional arsenal, but who cares? They can rebuild that with all the money they're going to be earning, from selling their oil, getting $300 billion of some investment fund, getting to have some fees on every ship that goes through the Straits of Hormuz. They're going to be raking it in. And, what do we do? They use some old missiles and some old, we blew up some old, planes and boats. I mean, I can't imagine their Navy and Air Force was all that great to begin with. I mean, it's possible that the missiles and bombs that we exploded were more valuable than what we blew up.
Well, given everything we've discussed today, aside from precious metals and gold and silver miners, are there any other areas of the market that you think could outperform up ahead?
Yeah, look, I've been buying emerging market stocks. I think they're very cheap compared to developed markets, and particularly the U.S. And I like all resources. Look what's been happening to copper. While gold was pulling back, copper was hitting new record highs. But look at coffee prices, record highs. Look at cattle prices, record highs. I mean, these commodities don't have anything in common other than the fact that they're all going up, and it's because of inflation. So I think you want to be invested in resources in general, and I think that will benefit Canada. Because Canada is a resource-rich economy. And so I think the economies that have a lot of resources that they can export will benefit from, what's going to be happening to prices.
If the government would only get out of the way and let the free market do its job, of course, we have a bit of
well, that's
far
always
left.
the problem.
Yeah, exactly. Well, Peter, where's the best place for people to go who want to follow your work?
Well, I'm doing my own podcast once or twice a week on schiffradio.com. Or go to my YouTube channel, which is probably the best place to go. That way you get to see me, because I do it live with video. So if you subscribe to my YouTube channel, I've got a little over 625,000 subscribers. And so you can add yourself to that list, and then you get a notification whenever I do one of my podcasts. But also follow me on social media. I've got over 1.5 million followers on X now. So that's kind of the platform where I spend the most amount of time commenting. So, you can read my thoughts on economic data, on political developments, on finance. I don't even really talk to reporters anymore. I just post on X, and then reporters quote me directly off of X. So that's kind of how I communicate, is using X. So people should follow me there, and encourage your followers to also follow me. But I'm on Facebook, I'm on Instagram, I'm on TikTok. So all the major social media platforms, if you're using those platforms, just go and follow me or whatever, because I'm putting content out everywhere that content is being consumed. And I'm trying to be as big an influence as I can, because I have to counter all the bad information, all the misinformation that's out there. There's not that many of me, and there's a lot of them.
Yes, and you've been doing that very effectively on X. You've become a major heavy hitter on that platform. Peter, I'm going to put links in the description below to your X as well as your YouTube channel so people can follow along. Thank you so much for coming on the show once again.
Oh, my pleasure.
Thank you for joining us today. Coming up this Saturday, the first live commodity culture boot camp, I'm going to show you how I vastly outperformed the S&P 500 over a 5-year time period, something achievable by only a very small percentage of actively managed funds. I'm going to explain my strategy, why it relied almost 100% on commodities, as well as give my forecast for how I see the commodities market performing up ahead. Go to join.jesseday.ca or click the link in the description below. June 27th, 1 p.m. Eastern Time, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.